welcome to our ongoing special series, MALLYAMESS, Frauds, Failures and Bad Loans. This is the show where you get you the latest on bank bad loans and efforts of bankers to recover them. First up, we will get you the latest on the Vijay Mallyas case itself. We will also get you the latest details on bankers' efforts to make SR Steel pay up. That's a heavily indebted company. Also joining me today is a very special guest, the former chairman of SEBI and an independent board member on several boards, former IAS officer, Mr. M. Damodaran. So, welcome to the show. We are coming to you in a bit, but first, let's get in Kritika Saxena to tell us what's the latest on the Mallya issue itself. Kritika, we hear that Vijay Mallyas could be asked to step down as chairman from the three companies which he is chairing at the moment.
Well, absolutely, Lata. We've already heard of Vijay Mallyas putting in his resignation from Sanofi and a couple of other boards where he is an independent director. But his group companies, which he has set up and is a founder and chairman, we understand he will be formally resigning from those in the next coming weeks. This includes United Breweries, United Breweries Holding Limited, which is the holding company of United Breweries, as well as Mangalore Chemicals. Now, we are unsure about what happens to his stake, most of which is pledged by lenders, yes, but there is still some personal stake that he holds in his own capacity. It's doubtful of what happens to that stake, but we do understand that the boards of all these three companies, starting with UBHL, will be meeting in the next 2 to 3 weeks. They will discuss all the permutations and combinations with respect to Vijay Mallyas' resignation and will formally ask him to put in his papers. In fact, there's already been an informal conversation, Lata, between Vijay Mallyas, his bankers and the boards and management of these individual companies that he will be putting in his papers. So another 4 to 5 weeks when this will be made official.
Okay, thanks for that, Kritika. Well, in more news on bad loans and how bankers are tackling it, last week we reported that banks have asked SR Steel to pay up or be ready for other options like getting a strategic partner or even entirely new promoters for the company. We told you that banks want to rope in players like Tata Steel or JSW, and letters have been sent globally to several parties. Today, sources at Tata Group confirmed to us that they were approached by banks about a month ago, but the group hasn't responded because they're not very clear if the bankers will convert their debt into equity, take ownership of the company and then start selling it to either to Tata's or any other group. The sources at Tata Group also told us that they are very unclear about the process that bankers are going to follow and hence they have not responded. Sources at JSW Steel also told us that they were contacted by banks, but per se the group said that it is opposed to the idea of a hostile takeover. They per se consider only friendly takeovers. They also pointed out to us that SR Ports is captively a port that only services SR Steel. So, in the case of a hostile takeover, it will be difficult to have relationships with SR Ports. They pointed out that some of the assets of SR Steel, like the oxygen plant, had been sold and leased back from Indian Oxygen. The slurry pipeline had been sold and leased back from SRE Infrastructure. So anybody who takes over will have to have a series of other relationships as well. There is also a PPA with SR Power, which the new owner, if there is one, of SR Steel, will have to renegotiate. The short point they made is that at the moment, there is no deal in sight. So both Tata's and JSW sources telling us that there is no deal in sight. All that they confirmed is that they were approached, and at the moment it is still very tangled. Actually, we did speak to Mr. Seshagiri Rao of JSW Steel, the group CFO, and here's what he told us about their own expansion and inorganic expansion plans.
So right now we are focusing on the brownfield expansion completions. So we have now become 18 million tons. So we will be concentrating and ramping up and stabilizing this 18 million ton. Simultaneously, we will continue to evaluate the options that are available, either brownfield or inorganic growth, as and when it comes. We will not be able to comment specifically on any particular target. In the month of December 2015, the capacity utilization in the world steel has come down below 65%. But January and February, we are seeing a slight uptick of 1%. So in February, it was 66%. So even after that, the overall steel production relative to the last year has come down in the month of January to February by 14 million ton, again majorly led by China.
Okay, so that's what we got through the day. And now let's welcome our guest, Mr. M. Damodaran. Mr. Damodaran, thank you very much for joining us on this special show. First up, you know, from the public domain, what is the impression you have gathered of the Mallya case itself? Are we confusing what is actually a business failure by calling it a business fraud?
I don't know enough about the details of the case to classify it either way. And I'd rather not comment on individual cases unless I have all the information that I need.
Okay, Mr. Damodaran, in that case, let me just expand the question. At a macro level, are we confusing what is clearly a case of poor banking decisions compounded by an economic slowdown? Or is it a case that there is an unholy nexus between bankers and promoters that has led to this mess?
I think we need to ensure that we do not, in the process of cleaning up the system, throw out the baby with the bathwater. Somewhere deep down in all of this, there seems to be some kind of an effort to create an increasing distrust between the lenders and the borrowers, and that is best avoided in national interest. I think what we need to look at is the fact that Indian banking has always been collateral based. When the banks were nationalized, we were to move from creditworthiness of person to creditworthiness of purpose. That did not take place. We still remained collateral based. Now, if you look at why the bank asset quality is where it is today, it's not just for the two reasons that you mentioned. There could be cases in which the diligence did not measure up. There could be cases of lack of integrity. There could be systemic downturns. That many of the industries to which banks have exposures are of a cyclical nature. But don't let the others off the hook very easily. What happened to people that sat on these bank boards, and I'm talking about people that represented the majority shareholder as well as the regulator? What were they doing? What was the rest of the board doing when the top NPAs came up for reviews that the regulator has asked banks to do? Were these mechanically gone through at board meetings? Were early warning systems looked at? Or are we waking up only when the asset has become an NPA without looking even today carefully at assets that are today's standard but could be tomorrow's NPAs if we did not, do the right things just now? So what about all the directions that were given to keep on lending? The meetings that took place regularly in the finance ministry where bankers were exhorted to lend, and not minding security, the tenure mismatches in terms of short-term funds and long-term requirements, the push towards infrastructure. All of that was really done mostly by public sector banks, and all of that will, in a situation of economic downturn, impact on asset quality. So when the asset quality is as bad as it is now, it's very easy to tar all public sector banks and bankers with the same brush and say these are all bad elements.
Well, I take your point, sir, that at a macro level we are tarring people with the same brush. I have lots more questions on public sector banks itself. It's time we took a short break. We are back with a lot more questions to Mr. Damodaran.